Morning, everybody. It's 8:45 on this Friday, last day of the week, and more big economic numbers. This morning we had October jobs. They came in at up 150. That is versus up 336 last month, which was revised down to 297. So 150 versus 297. Unemployment rate 3.9 versus 3.8. Average hourly earnings are up 0.2% versus 0.3 last month. Year over year, average hourly earnings up 4.1 versus 3.9. The underemployment rate still up at 7.2, and labor participation rate going the wrong way a little, 62.7 versus 62.8. Um, this morning when I came down, the market was up 20, Nasdaq was down 30, and the S&P was down 2 at 829 right before the numbers. They were all in that same area. Up 25 for the Dow, down 35 for Nasdaq, and down 2.5. After after the number came out, we were up 120, up 51, and up 13. And right now, the Dow is showing up 157, the Nasdaq up 64, and the S&P up 16. Interest rates came down. The 10-year, which a week and a half ago was 502, currently trading 455. Somebody made the comment this morning that the biggest market in the world, treasuries, and I'm not sure that's correct. Forex is probably a little bigger, but the biggest market in the world is acting as if it were a penny stock moving. This is a move of 10% in a little over a week. Um, you know, that is very volatile and frankly very concerning. Um, on the earnings front, we had Apple with a sort of beat, not really, a beat versus lowered expectations. But the real problem has been the guidance, which is lower. Apple this morning is down about $3. Excuse me, trading around 174. 85. That's down 272 at this moment. Um, Another old favorite, Fortinet. This is a cybersecurity company. They missed on revenue, beat on earnings, and also um, guidance was negative. The stock is currently trading 44.82, and that is down 12.77 or 22%. Just to give you a little bit of context, the last time they reported, which was in August, the stock had closed around 76, and the next morning traded down to 56. So this is the second stair step down. This company had a high of about 81 and change. A relatively small company vis-a-vis that particular industry was always thought to be a possible takeover candidate, and I guess the bloom is off the rose there. Um, I don't know how many more times I have to show this chart, the one on the screen right now, the oil, to make people understand that $80 is support and $90 is resistance. We came down. We did break on a closing basis. We did break the 100-day moving average for a day, immediately turned back up. Yesterday, we did not come down to the 200-day, and on a relative strength basis, it looks like a slightly higher high, a low, pardon me, a higher low, a low, a higher low, and another higher low. So, I look for this to rally a bit. As far as the bonds go, as usual, not wanting to be in them on expiration was getting out early. As you can see, we've extended up again. My original argument was 113 to 114. Yesterday we got up to 112 and 31 seconds. We took 250% profit, so I'm not terribly disturbed by it. But I would have liked to have seen a little bit of backing and filling. I think that this will sell off a bit, and on a longer term context, we're still going to issue bonds. We're still going to issue massive amounts of bonds. And frankly, that's just straight economics 101, supply and demand. When there's excessive amounts of supply, prices go down. I also want to mention that, what the Fed is doing now is what every failing bank ever did, which is just going to the curve and seeing where it's the cheapest to issue debt, and that's where they're issuing it. In the last couple of weeks, they have started to issue only in the very short term. Um, it's tough when you're trying to finance and refinance, roll over paper, and you're midway down. You don't have to be at the 30-year, but even the 2-year and the 5-year and the 7-year. They're issuing treasury bills, which means they have to issue them again and again and again. And that, in fact, is a great deal of risk as to what they're going to be able to do. So I don't want to sound too negative. Rates can still creep a little lower. Let's say we can get up to this 115 area. I'd be very surprised, because a look at this chart on a weekly basis, a little longer term, shows you that we are still lower highs and lower lows. So we've seen these little blips before. In fact, last August, we saw them go from support at around 117 in 5 or 6 weeks, all the way up to 132. That's a massive move. And yet it topped out again and made a new lower low. So there you go. All right, everyone. Hope you had a good week, and I'll be back Monday.